Hey guys, this is Joanna. Will the real estate market crash in 2022? Oh my goodness. Hi Johan.
Hey Joanna, thank you so much for having me here. Hi everyone, Happy New Year.
Hi everyone, Happy New Year. I am here with Johan Alvarez. He's the branch manager at Altera Home Loans, and we have been serving the Greater Triangle area and the surrounding areas, of course, for over 10 years. We've sold and helped people just like you, home buyers, purchase hundreds of homes. And we are here to educate you through our YouTube channel to let you know what's happening and whether or not we see a market crash come in this particular area. Remember, real estate is super local. So when we talk about market crash, I'm not talking about US, Puerto Rico, and other areas. We're talking about what's happening here. And let me start with something extremely sexy, I think.
Hot off the press, Joanna. Yeah, this is
hot off the press, you guys. And yeah, let me just take it right here. Home values are forecasted to soar nearly 24% in the capital city of the Raleigh area. Let's just put it here, pushing the typical home value to well over $450,000 from the current average price of $391,444. An analysis from real estate company Zillow finds only Tampa and Jacksonville, Florida are forecast to see higher value appreciation through November 2022. So what does this tell you, Johan?
well, the one constant that we've had, Joanna, despite everything that's been going on, is changes. You know, we've been seeing a lot of changes in the market.
Yep.
You've probably experienced the same thing if you're out looking for property. Some are still looking, others have given up.
Yep.
Hopefully you continue your search this year and you find something that you like. But this is very interesting, Joanna. I mean, it does cause some concern because some people are going to be pushed out of the market, but others are going to take advantage this year. Rates are still very low.
Historically low. Historically low, Johan.
And before they go up 24%, why not buy something now, right?
Yeah, so definitely keep an eye on what the market is doing. As I said, we've had hundreds of people, and everyone that has been telling us we're going to wait has found themselves, especially with the new year and with COVID and all of the things that you cannot predict with a virus, have found themselves paying $50,000, $100,000 and way over ask price in this particular market. We have done other videos, so check my YouTube channel because we've done other videos previously where we were letting you know what's happening with the rates. And now, while the rates might, slowly increase in the first part of the year, they might decrease in the second part based on Barry Habib. By the way, if you have never checked Barry Habib, I know that Johan introduced him to me for the market forecast of 2022. We have all the data there and it looks actually pretty nice. So, but what we're seeing though, right? Inflation. We're seeing inflation, big problem that it's like directly proportional with where the rates are going. So speaking of inflation, speaking of rates spiking maybe 2-3 times, throughout the next year, maybe dropping again, a lot of unpredictables because of COVID. But what we are seeing though in this market is this: multiple offers.
Yep.
Right? Still a lot of people not knowing whether or not to rent or to buy, and the rents are increasing every single month.
Actually, Joanna, I did some research on the rents, and it's just incredible how a 600 square foot studio is renting for at least $1,000.
Yep.
So that's a studio. Can you just imagine a 3-bedroom, for a 3-4 family?
Yep.
What are they paying? Around $2,000?
And this is why I brought Johan here, because looking at the numbers, let's just do a quick calculation on, Johan, what was the lowest rate that you guys have closed lately?
They've been in the low 3s. So at the end of 2021, we saw rates still in the low 3s. So approximately 3.0, 3.125, 3.25, hovering low 3s.
Okay. And based on the market forecast that we were listening to on Barry Habib, like I said, this is the prediction, and I'm just going to read it right here. So they're saying that we anticipate mortgage rates to rise along with inflation during first part of the year towards 3.75%. So let's just say 4%, they're already higher And this video was just published not too long ago, right? So let's just say if you are paying, like talk about rent versus owning a house, right? And the benefit of owning a house and how much equity you guys would have had already if you had purchased the house last year in January. Right?
Or when COVID started.
When COVID started, when we were with the masks on, getting ready to, let all of you know. And now, like, oh my God, like, what are we doing? We're not even sure where things are going to go. And then suddenly we had to write multiple offers on every single property that was coming on the market and offer $100,000 over ask price, and writing appraisal addendums and writing no repairs and as is, and all sorts of addendums that we have never in the history of real estate ever written. So this is what's happening. So Johan has some numbers for you guys, just because looking at the median price right now for the Wake County and just the general Greater Triangle area and what the prediction of Zillow is talking about, we have done some calculations for you for 3.25, right?
3.25, comparing it to 3.75.
Right.
What does that mean for you as far as your monthly budget? So, one thing is looking at the price appreciate from 300 to 350, 400, 450, but with the inflation in the rates, this is going to impact your monthly payment.
Yep.
So with everything going up, you could also expect your monthly payment to go up. So from let's say a priced home of $450,000, a loan of $360,000, so 20% down, which is probably very common in this area. You're looking at comparing a payment of $2,041, so let's say $2,000 if you're at 3.25, compared to $2,142, so about $2,100, $2,150 for 3.75. So that's at least $100 of an increase with this projection that we're seeing in the rates.
Right. And so just like you said, if you're going to pay $1,000 for a studio, but you can pay $2,000 to own your own house, even if it's a townhome at $450,000, why would you pay $2,000 to rent a house, knowing what's happening here in this area? I would like to also talk to you about loan limits, like conventional and FHA. I know right. Johan has those numbers for me.
Yeah, so we were all waiting for those updates last year at the fourth quarter. So in November, those updates did come about, and the conventional loan limit increased to $647,200, and the FHA loan limit increased to $420,680. So that's also keeping pace with the appreciation that we're seeing in home prices. It's no surprise that these limits have increased, allowing more people to borrow more money under the conventional FHA program. Okay,
so for all of you guys that are not sure what the difference between conventional and FHA is, can you please let us know?
Yeah, definitely. So those are the two most popular programs, especially in this market and probably across the country.
Yeah.
Conventional is probably going to be the most popular one because the sellers, the listing agents, everyone perceive the conventional loan as being an easier program to work with.
Right.
It's harder for borrowers to qualify for that program. So typically sellers try to accept a conventional loan. Conventional loan may have private mortgage insurance similar to FHA. FHA will require you to pay that mortgage insurance for a longer period of time compared to conventional. In many cases, if you're not doing at least 10% down, that private mortgage insurance cannot be deleted. And really, just to summarize it all, the private mortgage insurance with the FHA is guaranteed by the government, by the Federal Housing Administration, and on conventional, it's private companies that are offering that private mortgage insurance.
And also there's a difference in qualification, like upfront qualification when it comes to your credit scores.
That's right, yeah. So the government programs will be a little bit more lenient when it comes to credit. If there's been a situation where the credit has been impacted, we can get FHA loans done with at least a 580 credit score. Compared to conventional, the minimum is 620. The rates are also a little bit more competitive on the government programs compared to conventional. So it forces people to have a higher credit score to maybe pursue a conventional loan compared to a government. Yeah.
Right. And so speaking of that, Johan said something very important. When it comes to submitting an offer, right, and the competition that's been happening in the Greater Triangle area with a conventional loan, as he said, your chances are higher because as listing agents, we're looking at that. We're looking at appraisals, right? We're looking at how the house is going to appraise, how the appraisal is going to have an effect on the home. Is it going to stick with the house for a period of time, especially if you're thinking about also like, you know, maybe getting a VA if you're a veteran. So there are certain things that you need to consider. As a home buyer, of course, work on your credit, make sure everything's fine before you want to purchase a house, and consult with a lender before looking at homes, but that's a different story in a different video. However, yes, the market is competitive. So what I'm trying to say with this is that you know, with these loans and with the pricing appreciating and with the competition, you need to make sure that you know where you are, and you need to make sure that you're understanding the speed of where we're going with all the companies coming to the Greater Triangle area, how impactful it can be on your life, how even, you know, from 3.25 to 3.75, things can just change within 3 months, right? So, I mean, the forecast actually looks better than we thought, at least based on Barry Habib, right? Again, you do not know what's going to happen, but what we do know for sure is that people are coming here. Like you saw here, this market, except Tampa and Jacksonville. So what's happening here? Who's moving here?
We're seeing a lot of relocation, and you know, Joanna, just before we were talking about the holidays and how we were both traveling, right?
Yes.
So demand is still very high in this area. People are moving here. People probably came on vacation to visit family for the first time after COVID started, and they're probably thinking about buying an investment home, a second home, and maybe helping their family member that just moved here purchase a home. So I think demand is still going to be very high in this market. We're seeing a lot of companies moving here as well. You're going to be moving a lot of people, opening jobs.
Jobs, like I said, jobs. I went to the park after we came back from Florida, and like the amount of moms with their kids at the park tripled, and everybody was talking about how nice it is, how the weather was so great here, you know. And again, go back to our videos. We have several videos on YouTube talking about, you know, the weather here, or reasons to move, reasons not to move. I mean, this area is not perfect by far. There's no such thing as perfect. But overall, the moms are talking about, oh my God, it's so nice out here compared to New York or to New Jersey or to the taxes that they have to pay here. We have several people coming down, right? So they're coming here, they're coming to Florida, they're sick of not having enough space, paying a lot for the real estate, paying high taxes. So again, if you are considering coming here, please connect with me, connect to Johan. Just find out the type of programs that they're offering. Look at your closing costs. Look at how much money you would pay in, you know, if you own the house versus if you rented a house. Ask us about details on the market. Only from October to November, the pricing on the Greater Triangle area for just everything increased 1.1%. So from month to month, and compared to last year, it's like, what's the appreciation? Like 40%. Like, it just, because again, these people that are coming, they're coming and they're disturbing the market big time. If the house is listed at $550,000, they're going to offer $650,000 in cash because they're selling their homes in LA for millions of dollars, and it's a piece of cake for them to come and buy a $650,000 cash here. Darn it, they're buying for $650,000. They're buying investments. They're buying homes for their kids that are at university. This is the moment for you to get wealthy historically because of the low rates. You don't have to be cash. So that's where, you know, Trump got richer. We should all go, you know, to Manhattan. This is just historic times, right?
Right. So definitely leverage the opportunity that there is right now with still historically low interest rates. Prices are still affordable despite the appreciation that we've seen year over year for the last 2 or 3 years, or even before that. But also, you know, don't get discouraged. You know, you can do it. You know, compared to paying rent, home ownership is definitely a better investment long-term wise. Joanna, what are you seeing with the due diligence? That's something new for a lot of people in North Carolina. You know, they don't have this in New York or New Jersey up north. What are you seeing right now with due diligence?
I see that I scare a lot of people when I talk about it. Like, I literally have people who go, wait, what? How much money do we have to put? So things have slowed down. Let me just start with the positive. Compared to 6 months ago, where we were putting $75,000 in due diligence, things have been less aggressive. But you still have to put that fee up front at the time of contract, which could be very high. in case of a multiple offer situation. But the good part is that you're not losing that money. You are going to get that money back at closing, right? So long story short, it's something that you will find in North Carolina. It's a fee that has to be given. The seller is going to cash that at the time of contract, but do not be scared of that. We know how to negotiate. We know how to get you a house that's not going to be, needing to be demolished. Like we're very thorough in what we do. And you can look us up, both of us. We have 5-star reviews all over the internet from quite some, a big amount of people. So in other words, trust us. Let us know if there's anything that we can help you with. Please subscribe, click that notification button, click the bell, because we do post videos every single week and things change every single week with all these companies coming here. So you want to know what's happening with the rates, the programs, the pricing, with inflation, and how it affects the Greater Triangle area specifically. So subscribe, the bell is right there, call us, our information is going to be there. We're here to help you and make this an amazing home buyer year, and also for home sellers as well that want to downsize or maybe upgrade. So yeah, is the housing market going to crash?
Is it?
We don't know. That's the conclusion after 10 minutes.
We don't think so.
We don't think so.
Don't think it's gonna crash. And even if there is a recession, Joanna, prices have gone up tremendously. So if they come down, you still have equity.
Very good point. Yeah, I mean, literally, there's still, and the rates are still low, even at 3.75, even at 4%. Gosh, I bought my first house like 6% in LA many years back. So we are good. Congrats on making the step to coming to North Carolina. We can't wait to hear from you. Both me and Johan Alvarez and our companies are here to serve you and to educate you, because there's nothing better than being informed. Take care. Ciao. Take care.